Alright guys, welcome back to my channel. For the new subscribers, thank you for subscribing. For the viewers, thank you for clicking this video. First off guys, I would like to wish you guys a happy new year and welcome to 2025. Now guys, with 2025 finally here guys, you still need to become profitable in Forex, right? And guys, you might still be confused. That is why I actually made this video, because I'm going to be giving you guys 5 tips or 5 different things that you need to learn in Forex right now. That once you learn these 5 things guys, you will become profitable, right? So let's jump straight into it. So the first thing you need to learn guys is going to be how to mark up your area of interest, right? And guys, your area of interest is going to literally help you to take good trades, right? Like literally bear trades. As you can see here, like I literally took this trade here, right? And I took this trade here. Now I did lose this trade here, but guys, like it's still part of the game, right? But guys, your area of interest is essentially very key when it comes to you taking your trades and looking for, high probability setups, right? Because guys, your area of interest just basically shows you the demarcation between buyers and sellers. So as you can see on here guys, that literally when price was tapping this zone here, you can see that price bought all the way up. Same thing here, literally bro, price literally tapped this area of interest, and as you can see, price bought all the way up. Same thing with the daily time frame, right? So now the blue box here is going to be your daily time frame area of interest, right? And as you can see guys, price literally tapped that box there. Once it tapped it, it gave me my entry, and as you can see, price now sold back down, right? So at the end of the day guys, your area of interest is very essential when it comes to you being a profitable trader, right? Now guys, the second thing you need to understand is going to be the time frames that you're going to be using to trade, right? Now, contrary to popular beliefs guys, the only time frames that I use is literally only 2 time frames, right? The daily time frame and the 1 hour time frame, right? And guys, these are the only time frames that you need. You feel me? Now what I use the daily time frame for is very simple, right? So I do use the daily time frame to look at like the macro point of view. Now I'll give you this example, right? So you know how in Google Maps, right, you can literally see the above of the map, right? Like literally on the map, you can literally see the satellite of the map, the whole map and everything from above, right? And then there's also a point of view where if you click inside the map, you can literally go through the street inside the map, right? This is basically how I look at trading, in the sense of the daily time frame is used, right, to look at the overall market, right? What's happening from above, what are you seeing from above, right? And then the 1 hour time frame is now what you use to follow the market inside, like intrinsically. So in this case here guys, literally you only need like 1 time frame, to be honest with you. Like literally I only use 1 time frame, quote unquote, right, to find my entries and like to follow the market. But the daily time frame is what I use to look at overall, where is it going overall. That's how we're able to predict moves like this, where price will literally buy up from here and go all the way up here. And then as you can see, you can also predict moves like this where price literally retraces from here, from the daily area of interest, and then sells, and we look for good setups like this, right? So at the end of the day guys, you need to understand that the daily time frame is just for looking at the macro point of view, and then the 1 hour time frame is to now follow the market structure, right, intrinsically. We still have to mark our area of interest in both the daily and the 1 hour time frame, right? Now at the end of the day guys, the daily time frame, you don't have to mark too many lines in the daily time frame, because like I said, right, the daily time frame is to look at the macro point of view, right, from the above, from the rooftop, right, from the top, right? So that's why we don't have too many area of interest. So in the daily time frame, we can see that we only have 3 area of interest. And the third thing you need to understand guys is going to be market structure and how it actually works, right? So now when it comes to market structure guys, this is how I look at market structure. It's very simple guys, right? So market structure just boils down to understanding your pivot points, right? So if price is buying up, right, you need to understand how to identify this pivot point right here. This pivot point right here. So right, you need to understand how to identify this pivot point. Why? Because once you can understand this pivot point guys, you can determine what the trend is, right, when the trend has changed. So in this case here guys, whenever you're looking for a change of trend, you need to wait for price to break the previous low, right? Once price breaks and closes below this previous low, then the trend has automatically changed, and we are then now anticipating a retracement, and then we now continue selling. And then now it's now your job to now understand how to figure out the pivot point of the highs when price is now in a downtrend. Now when it comes to actually understanding the pivot point, I'll give you a very good example, right? So the pivot point guys needs to have at least 2 candles, right? So for example, in the case of a buy trend, right, the pivot point has to have at least 2 sell candles, right, in the case of a uptrend. Now in the case of a downtrend, the pivot point, which is going to be this point right here, the top, right, the start of the impulsive move, needs to have at least 2 buy candles, right? So the reason I'm saying this is because guys, let's say for example, right, you're actually, looking at the chart right now. Let's say the the real pivot point in this actual move here is going to be this right here. Let's assume this is the real pivot point, right? What this basically means is, guys, if price was to sell all the way down here and doesn't close below this, the trend is still bullish, right? So price can still sell all the way down here, but still, when it reaches this area here, it's now going to find its way back up, right? So I'll give you an example real quick, which is going to be this example right here. Boom. Right, so in this case here, guys, you'll notice something, right? So if I was to play back my chart real quick, you're going to see that price has given us a huge high right here, right? Now what determines a change of trend is price literally closing below this area right here. Why? Because it has at least two sell candles, right? So like I told you guys, in the case of an uptrend, price needs to have at least two sell candles to determine that low as the actual pivot point, right? And we use that pivot point to then now determine when the trend has changed, right? So in this case here, guys, literally for the trend to change now, currently right now the trend is bullish, right? So for the trend to change, right, price literally needs to sell all the way down here and close below this. Once price now closes below this, low right here, then the trend has changed, right, officially from buys to sells, right? So in this case here, guys, you're going to notice that price ended up selling, but guys, when it reached this area of interest here, it then now found its way back up. Why? Because the trend is still bullish, right? And this was actually my mistake that I made. So in this specific trade here, like literally, guys, I took a trade right here, right? A very simple one-to-one, trade here, a simple one-to-one. But then, guys, I now took a sell trade right here, right? And guess what happened, guys? I lost. Why? Because I wasn't following the trend in this sense, right? Like I didn't realize. I don't know. Not that I didn't realize, but I did not take into account, the trend. To be honest with you, like I didn't really take into account the trend. This is what messed up this specific trade here. But I've learned my lesson, right? So in this case here, guys, you can see that price is still bullish overall. Why? Because it has not closed below this pivot point right here. So if you notice too, even here, same thing too, right? Price is still maintaining, this low right here. So when price created this high, right, price needs to break below this low here for the trend to change from, buys to sells. That is why, as you can see, price, even though it gave you like this mini sell structure here, it came close to this zone here, right? Rejected, and then guess what happened? It literally bought all the way up, as you can see. So this is basically what you need to understand when it comes to market structure, right? And how you actually understand what the pivot point is and things like that. Now, guys, the fourth thing that you need to understand, I guess, is going to be your entry model, right? Basically how you enter the market. Now, guys, in my 4 years of trading, right, I have finally come up with this specific entry model that I founded, right, which is called the SDI entry model, or the SDI stop loss model. And essentially, guys, this entry model is very simple to understand, right? So basically what you do is this, right? First off, price needs to either tap your 1 hour area of interest or your daily time frame area of interest. So in this case here, guys, when price has tapped your area of interest, let's assume this was your area of interest right here. Now let's say price is, is selling, right? Boom, like this. When price taps your area of interest here, the next thing you do, guys, is to literally just wait for a doji candle to form. It's literally very simple. Wait for a doji candle to form, right? Now when it comes to doji candles, guys, you might be confused on what type of doji candle you want to, wait for. Now, when it comes to doji candles, guys, you have to wait for these specific types, right? So it's going to be doji candles that are in the middle or close to the middle. That's basically what I define. Not gravestone doji or, dragonfly doji. No, I'm talking about just regular dojis like this, where the, the body is in the middle of the wicks. So you can either have it this way, or you can have it this way, where the doji is now like in the middle, right? So things like this can be different variations of the doji candle, right? But at the end of the day, you have to wait for the doji candle. Now, once that doji candle has appeared, the next step, guys, literally, bro, the next step is to now wait for price to take out the low of the doji candle, right? Now, when I say the low, let's assume you're actually looking for buys, right? So let's say, price now reaches this area of interest. It now creates the doji candle. Now, wait for price to take out the low, right? All it has to do is literally just poke out. Literally just poke out, under that candle. Once price has poked out, then you wait for your entry candle. Now that entry candle, guys, is going to be your shooting star, right? So in this case here, guys, literally, bro, price can, tap you in, and then once it taps you in, wait for that shooting star to occur. Once that shooting star occurs, that's when you now take your entry and then stop loss directly, below that candle, right? So what I'm going to do, I'm going to give you like a very simple example. So in this case here, guys, literally, bro, this is a perfect example right here. Perfect example, right? So, like I told you guys, you have to wait for price to what? Tap your area of interest. Once it taps your area of interest, then you now wait for that doji candle to form. So in this case here, guys, you can see that price tapped our area of interest right here, right? Once it tapped our area of interest, you then now wait for that doji candle to take out the low, right? As you can see, the high of the doji candle has been taken out, but the low has not been taken out yet. So what do? You wait for that low to be taken out, right? So boom. Okay, now notice something, guys. Notice something here, right? Notice, guys, price has not taken out that low yet, but it gave us our entry candle. What do? You do not enter, you wait. Do you feel me? Right? So you literally wait, bro. So in this case here, guys, price has not taken out the low of the doji candle because you're looking for buys, so we do not enter yet. As you can see, guys, this is the 1 hour time frame, so you will wait for at least like 6, 5, 7 hours, bro. Like you can literally see, right? So in this case here, guys, same thing. Price now gives another doji candle, but guess what? It has still not gone below this doji candle, so hence you do not take your trade yet. Then boom, you wait now. See, notice now. Price now finally took out the low of that doji candle, right? So if I was to mark this there, boom, you can clearly see that this candle right here took out the low of the doji candle, and it just so happens that that same candle now gave us our entry, candle, which is going to be the shooting star. So in this case here, guys, price gives us the doji candle, takes out the low of that doji candle, and then guess what it does? It then now gives us a shooting star, and then you now take your trade. Boom, stop loss directly under that specific, entry right there. Boom, and then TP is whatever, right? As you can see, in this case here, TP would have definitely been smashed, right? Now, let me explain to you why I actually lost this specific trade right here, right? So if I was to fast forward real quick, and I'll show you exactly what happened. As you can see, price ended up, hitting our TP real good. Now, same thing happened here, right? I was looking for sells here. Why? Because my bias was basically daily time frame, bias here in this case. But as you can see, I was looking for sells essentially, right? So basically what happened was this, right? To reach my area of interest. So in this case here, this was my area of interest here, right? So if I was to adjust this like this slightly down, right, this was my area of interest. Now price now finally tapped my area of interest right here and gave me a doji candle, this doji candle right here. Boom. As you can see, boom, you can mark that box there as a sign of liquidity or doji candle, whatever. And as you can see, price now took out the high of that doji candle. Then the next step is to now wait for price to give you a shooting star. Now, as you can see, price did give you a shooting star right here, but what I usually do is I like to wait for price to close inside the doji candle, right? So I would not have taken this entry here. I would have actually taken this entry right here, this specific entry right here, which I specifically did. As you can see, boom, right? So in this case here, I took this entry there, right? And then guess what happened? Understand again, right? The trend is still bullish in the 1 hour time frame, right? So if you notice, guys, boom, price now gave this, entry of a sell, and then it was now, doing some like creepy stuff here. So in this case, you notice that price now like gave like another doji candle and then a shooting star, right? So I should have actually taken this trade here. Now, when it comes to debating whether or not you want to go out of your trade and enter the next trade, now depends on the language of the forex market, right? So in this case here, guys, if we were to fast forward real quick, you're going to notice that like, right, price give us different languages, right? So for example here, right, when we entered here, guys, price was like, consolidating and things like that. But notice, right, notice what the language was saying here. Notice that price gave us our entry model here for the buys, which was opposite of our original buyers, right, sells. And then a couple of hours later, price now gave us like multiple back-to-back shooting stars, right? So when I see these multiple back-to-back shooting stars against my trade, this is a sign that price wants to, stop me out. So this would have been, a trade I would have avoided if I just literally, went out of my trade at this exact moment and then entered a buy. right? But this is basically what you need to understand when it comes to your entry model. And finally, guys, the last thing you need to understand when it comes to you being profitable in Forex is going to be my ebook, right? So I literally, guys, have created an ebook where I literally break down every single thing that I have literally explained in this video, but in an ebook format, right? It's completely for free, right? So if you do want this ebook, guys, just click the first link under the comment section or the first link in the description of this video, and guys, you can get the ebook, right? So this ebook explains exactly my entry model, how to use the SDI entry model, right? How to mark up your area of interest, right? How to use different time frames, right? And understanding the market structure, right? Once again, guys, I want to wish you guys a happy new year, and I hope you guys, become profitable this year, because this year, like what's his name, Andrew Tate, was like, this is the final year for you to become rich, right? So I hope you guys do get rich this 2025, and I'll see you guys in a different video. Peace.